What are some forgotten tax deductions for real estate owners?
I would say we have noticed while reviewing several tax returns that real estate investors many times forget depreciation to claim the depreciation because it's complicated to calculate the depreciation, so people kind of try to ignore it. And then they think that, okay, I have not claimed the depreciation, so there would not be any recapture. But that's not true. Anytime you sell the property, it's always depreciation allowed or allowable. So whether you claim it or not, you still have to recapture it. So I would say that the most often missed item is depreciation. Number two is also many times we forget that we have people take out home equity loans to buy the real estate.
Right.
And then those 1098s are usually shown into the home address rather than for the rental. But then you're supposed to claim that on Schedule E, not Schedule A. So it's not limited because nowadays the mortgage interest limitations are only $750,000 worth of loan, right? So if you have borrowed more than that, and if you have used that funds to buy the real estate, you should allocate that interest over to your rental income you have to claim it against your rental income. Another most forgotten deduction would be, going back and forth to see the properties, to see, to make any repairs, do any other, meet the tenants, collect the checks. All those travel expenses are deductible.
I see.
And then lastly, I would say that legal and professional fees are also many times ignored, right? You give your CPA a tax return preparation fees, then instead of claiming it on a Schedule A, if you were to claim it on a Schedule E, that you get to deduct it against your rental income. I would say the trick of claiming the legal and professional fees would be to claim it on Schedule E so that you get a full deduction.
Check the full episode on our YouTube channel and on Apple Podcast.